The re-privatization of the American economy is underway. The job market holding steady despite panic on Wall Street. Job growth coming in much stronger than expected in March. Employers adding 228,000 jobs to the economy. And private sector hiring is doing the heavy lifting, while government hiring is cooling off as DOGE continues to downsize. Meanwhile, Trump saying that this is proof his economic strategy is working, saying, hang strong. Gary, I think one of my favorite anecdotes that I woke up to was, at least within the market, Trump said the patient got through surgery, but everyone was like, yeah, but you made me do surgery without anesthesia. And sometimes I need some anesthesia.
Yeah, what type of surgery too?
But so talk to me about the jobs number, because some people say irrelevant, too backwards looking, but other people say how much momentum does this give the economy to offset any headwind from tariffs?
Unfortunately, I think we're stopped dead in our tracks.
Really?
What we're seeing right now really matters. I don't know how you're a company and you can really hire big time unless you're in boom times. And right now, I think most of the Zoom calls and the team calls and the meetings right now are about stanching the bleeding and what guidance may be on the downside. I think the president should say to himself, look what was going on in March. And I love government down, private up. That's what we wanted to see. And I think he should take some comfort in that and knowing, and let's get past this tariff thing, we were on our way. And I will tell you, the prosperity of America has never stopped, but this has got to stop. You cannot, when I hear them say $600 billion a year for 10 years tax increase on the consumer and business, I just don't get it. For an administration that says one of their main themes of growth going forward is lower taxes, what the heck are we doing with these tariffs?
Okay.
But part of that story is to lower taxes domestically, right? Now, you may not agree with that, but they are linking external revenue from the tariffs to internal tax cuts, which I think is good. And I mean, we got to remember 85, and you say this all the time, 85% of this economy is non-import dependent, okay? So there's a lot of people. I look at this job number, 228, and there's negative government jobs. For the second time in years, last month and this month, negative, which means the private sector was hiring in March, okay? That's a good thing. There's some resiliency out there, and maybe it's not in Wall Street, and maybe it's not in the coast, but in the middle of America, where people maybe have businesses that are not import dependent, they're actually excited about what this president is doing, and they are investing and they are hiring. Now, maybe they're getting nervous. Okay, fine. But I'm just saying, I don't think we should confuse what we see with the Dow right here with the way the average American feels about this economy.
Can I just intervene on that?
Yeah.
The market is big institutions and very smart analysts making decisions on the future based on fear and greed of what's to come, not what has already happened. And right now, at this point in time, we are talking about a situation of A, as we said, uncertainty, and B, what are the costs going to be going forward, and how are we going to eat those costs or pass them on? But no matter what, it is an increase in cost, which is a lowering of profits across the board. Thus, you're seeing what stock prices are doing. And that's just reality.
Jackie, I'll come to you on this. Does what's happening on the screen lead to job cuts in the private sector, right? That is the question with jobs numbers.
And no one at this table knows. Correct. I don't think the administration knows. I think we have to see how it plays out. You could see a scenario, Gary, where we have a pause here, to your point, with respect to hiring and uncertainty, but you could see some of that manufacturing come back and see a little bit of a boom. In that Navarro interview yesterday on our competing network, he talked about what has driven this market over the last few years, the Magnificent Seven. And he's talking about how he wants to see more breadth within the S&P and strength in some of our other companies to take the markets higher, too. I just am not as I understand what you're saying about trading and algorithms and markets, smart people looking at the future and not knowing, but the market's also been wrong before. And typically we end up rebounding. I'm patient enough to say I want to see all the pieces of the policy come together. And listen, my 401k took a hit too. I'm just not looking. I'm saying this is 2 days of trading. Today was substantially worse than I thought it would be. And I'm not saying that the worst isn't over yet. I just don't think that we know. The other thing I would say is I look at this administration and say, are they all just a bunch of idiots? I don't think so. I think there is a method to their madness, even if you don't necessarily agree with the way they're going about it.
In every bearish phase, I have stated the same thing. You cannot bet against the American people, the American worker, the technology breakthroughs and the medical advancements, the greatness going forward.
Yes.
But we're at a point in time where, what have we always complained about with Biden? Government. And I have stated what I thought all they had to do right now is lower taxes, less regulations, get the border in shape, and get the heck out of the way. What we have right now is not getting the heck out of the way, and you're seeing what we're seeing. If they did, I think we soar. There is a chance here we're going to extend tax cuts. Oh, my goodness gracious.
We're not extending them. It's going to be permanent. That's what the plan is.
Terrific.
And there's an additional, in addition to the permanency of the existing Trump tax cuts, there's a $1.5 trillion set aside in the Senate framework that they're doing a vote-a-rama on today to add tax cuts. And then you've got spending cuts and deregulation, all of that cobbled together. We talk about the $600 billion in money that will be raised from these tariffs. It will not be $600 billion because the exporters will eat it. They will eat a lot of it. It was 80% of the the tariffs, and that was a sliver from the first Trump administration, were eaten by the exporters and businesses. That's based on E.J. Antoni's work. People debate how much of the tariffs were eaten, but 80% were eaten and not passed on to consumers. So the revenue raise or the tax on consumers will not be as great. But it chaps my backside when the Democrats talk about tariffs as purely a tax on consumers, but they talk about corporate tax cuts not hurting consumers, but being a giveaway to billionaires. Take your pick. What is it?
Yep.
Again, they're playing politics here. Can I add something really quick? Peter Navarro needs to stop talking about the stock market. If he's the trade guy, if he's the tariff guy, he was picking the bottom yesterday. We're at a near a bottom, say the technicians. Okay. But Trump has said he's open to reducing tariffs for phenomenal offers. He's negotiating. He's crowing about Vietnam. Do more of that and quickly and come up with a solution.
There you go.
We want hard and fast. And one of the reasons the market is selling off dramatically has nothing to do with this. It's because Kyle Bass, shout out to you, because the massive sucking sound of the decline in the Federal Reserve's balance sheet should be cited as one of the primary causes of the stock market rout. Almost $2.5 trillion of primary liquidity has been removed so far. April 1, the Fed is slowing its balance sheet runoff. But you know what? Rather than pointing at President Trump, hammer Jay Powell and co.
Gary is going to fact check me in the break, but when NVIDIA is cheaper than Coca-Cola on a forward PE basis, things start to look interesting.